Hello and welcome to today's NinjaTrader ecosystem event, Unlocking Profit Potential, ORS, the Opening Range System Explained. My name is Patrick Hodges, and I'm a NinjaTrader ecosystem vendor relations representative. Before we start the webinar here today, I do have a few housekeeping notes for everyone. Now, secondly, this webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader software. Brokerage-related questions should be directed to the NinjaTrader brokerage using the phone number or the email that you see on your screen. Lastly, if you are new to NinjaTrader, please make sure to sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can create your free account by following the link that's on the screen. Now, before I turn the mic over to Jake, it's important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more of your initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Also, please remember that today's session, that these training sessions in general are not a solicitation nor a recommendation, but simply educational in nature. I want to thank everybody for joining us here today. And without further ado, it's my pleasure to welcome to the NinjaTrader webinar room, Jake with StratGeeks.
Thank you, Patrick. How's it going, everybody? Welcome, welcome, welcome. It's pretty cool. It's my first NinjaTrader ecosystem webinar. I remember when I first started trading futures on NinjaTrader. Actually, I have not wavered. I've been with NinjaTrader from day one, before micros were even a thing. It was probably like 8 years ago or something. So yeah, I remember when I first started to mess around on NinjaTrader with NASDAQ. I've actually been stuck with NASDAQ the whole time as well. But yeah, I remember when I first started, I watched a few of these webinars and I was like, oh man, that's so cool. I wonder if I could ever host a webinar one day. And look, here I am, Jake Royal, hosting a webinar on NinjaTrader. Thanks again, Patrick, for all your help. Get me all set up here with the company. Yeah, so this is an idea, a strategy that I have been working on for, I mean, the better part of, I guess, from day one since I started trading, but really more so in the last 4 years or so. I started to realize patterns in the opening range, which I'm sure a lot of you have, but mine's very particular, and it's quantifiable. So let's get started. So I'm going to share my screen. Make sure I share the right one. There we go. Does everybody see that? Look good? Nice. All right, so this is my strategy, ORS Fusion. It's kind of the same thing, and the company is StratGeeks, but we're really just going to go over, I'm just going to educate people on what I've been doing for the last few years. And yeah, let's just get started. So this strategy I have automated as well. So, but basically, well, there's me. There's my dog, Lexi. I am a real person. So before I started using the opening range, and I'll get to what exactly the standard deviations are, but before I started using the opening range and splitting it up into 4 sections, using standard deviations, it felt to me like trading was kind of like, I don't know, going on a camping trip or something without knowing the weather, without checking the weather forecast first. Just check the weather forecast first. So what this ORS strategy has enabled me to do is, and all of our fellow traders that use this system, is we gauge the market by the first 15 minutes of the day from 9:30 a.m. Whenever I'm using time, I'm always going to speak in Eastern Standard Time. So from 9:30 a.m. to 9:45 a.m., that's our opening range. You can kind of think of it as one 15-minute bar. So that sets the stage, if you will, for the whole rest of the day. That sets out our levels. So each day is a special forecast for that particular day. So I think it might be, let's see. Yeah, so my big thesis is that though the world of trading looks messy and chaotic, especially when you're first starting out. Oh man. If you translate it into the world of numbers and shapes, patterns do eventually emerge and you start to understand why things are the way they are. So let's pull up a chart just to get started here because this is educational after all. So here's my favorite trading chart. I personally like the black and white bars because I don't know if any of you have already experienced this, but there have been studies done that red bars are elicit a lot of extra fear, and green bars elicit a lot of extra greed. So why even have that extra thing kind of in in my consciousness to affect my emotions and my possible sticking to the rules or not sticking to the rules? So I choose to use black and white bars, old school. So let's get the first thing before we even talk about the actual automated strategy. I just want to show you folks exactly what I've been doing. So if we go to indicators, and this is available on the NinjaTrader ecosystem free of charge, and it is the opening range indicator. And we can see I have it set start time 9:30 to 9:45, and we'll click OK. All right, hold on a second. I got to take a deep breath. Okay. I don't have to rush. I don't have to rush things. Be yourself, Jake. Okay, I will. I told myself my number one goal today is to have fun. Have fun and teach. I'm a martial arts instructor in my spare time. I'm a black belt in Hapkido, and I know it's a good class if all my students had fun. If they had fun, you're darn right they're gonna have learned something. So I'm gonna have a sip of my beverage here, and we're gonna have fun. That's what we're gonna do. I'm based out of Santa Barbara right now, and I got a 9-year-old daughter, and in about 2 weeks or so, moving to Bali for like 6 months. So that should be interesting. I'll be trading in the wee hours of the nighttime. Well, that's okay. I'll get used to it. It's Bali. Twist my arm. So we can see here. Let's zoom in. Here is the start of the opening range. 9:30 a.m. 9:30 a.m. So what we're doing is we're looking for the high and the low in that first 15 minutes. Here's your block of time right here to 45. So we can see we put in our low in the first 15 minutes right here, and we put our high in right here. So this dictates our levels for the whole rest of the day. And if you go back in time and you look at this, if you load this NinjaTrader ecosystem free of charge opening range indicator up on your chart, if you're anything like me, you'll start to see some crazy support and resistance, and it's all quantifiable. I'm not like, oh, that looks like a pretty good consolidation low over here, like that looks good. Maybe we could use this, or maybe, I don't know. It's just all so subjective. I got so sick and tired of subjective. I read Trading in the Zone. Hopefully you folks have all read that book at least one time. I'm a huge Mark Douglas fan. I read that book, and by read, I mean listen to on audio 6 times. I'm actually in the process of listening to it for the 7th time. Probably listen to it on my plane flight out to Bali. But after reading that book multiple times, it became more and more apparent to me that I needed a completely objectified edge. No input of my own. Basically 100% rule following strategy. So that's what this does for me. So we got the high and the low in the first 15 minutes. Then I got this special fib tool where we're going to split. Here's the magic right here. We're going to split the opening range high and low into standard deviations, or you can call them range levels. I was told today that standard deviations might not be the best term, but whatever. I've been using it for years. So we're going to call them standard deviations anyway, SD. So we plot the low here, and we'll drag this until we've split up into 4 sections. There it is. So we can see 1, 2, 3, 4. So those are our standard deviations. And let's just go back. Let's just look to see. Today was a serious downtrend day, so we're not going to see any more pullbacks. But, you can notice some resistance here, tries to break out, and then bam, plummets through. Let's look at another day. I think yesterday was pretty rangy. So I want to show you the basic idea. I mean, even that is pretty cool. I mean, here's our first 15 minutes right about here. Put in our high, low here, high right here. Hopefully you guys can see that. And then, I mean, it's so obvious to me after a while. We come up, then we come back down. Oh, I wonder where we're going to bounce. I remember this trade. And then we come up, we whack around a little bit, then we blast through right here. And where do we end up reversing? Right here at the middle of the opening range. And then we get this big spinning top right here. All this resistance comes back down, almost hits it here. But then watch what happens if we go ahead and apply our standard deviation rule and split up into 4 sections. You can kind of see the pattern start emerging, right? And this might not even be the best day, but we can see all this consolidation here, more here on this next level down, comes back and hits the middle, whacks down to the second line. Let's look at one more day. This is important. It's important to see this. Yeah, so there's been some serious downtrend days lately. Let's find some. Here we go. Oh, here's a good one. So like I can't even imagine, just goes to the weather forecast thing that I was talking about in the beginning. I can't even imagine trying to trade without these levels anymore. I mean, to try to draw in my own idea of where support and resistance is, no way. These levels are good. These are good. So we'll draw from the bottom to the top, and y'all can send me an email, or we'll go over how you can get in contact with me via Discord, and I can send everybody this Fibonacci tool because it is a little bit of a pain to create, and I have no problem sharing this. So yeah, check this out. Here's the first 15 minutes. And you could use this theory however you want. You could use EMAs. Oh, actually, we're going to go over that in a second. You can use EMAs. You could use stochastics, RSIs. But as far as the support and resistance levels, this is it right here. So here's our low. There's our high. We come up. We tried to break out, and then we get all this resistance right here in the middle section. Come back down. You can see it bouncing here, and then we get this nice consolidation right here. It just, all of it starts to make sense when you see it like this, or when I saw it like this. Here. I'm just kind of making my point here. Does that make sense, everybody? You kind of see what I'm saying? All right, so let's clear all drawing tools. Yes. Okay, so let's look at today. And I'll show you how we can take some trades based on this. So we'll slap our 4 standard deviations on here. And I use ticks. I think they're more granular. It's easier to see. So our whole opening range here comes the next part. So our whole opening range is how many ticks today? Measure from the low to the high. 527 ticks about. I'm not going to get perfectly exact right now, but we can see it's about 527 ticks. Well, what's our standard deviation? Standard deviation is one of these range levels. So it's about 129 or so. So from here, we can pick out our stops and our targets per day. So today, if you're going to use one standard deviation as your target, you have 124 tick targets. Or maybe you want to use 2 standard deviations as your target. It's kind of like ATR, but I like this a lot better than ATR because it incorporates the support and resistance levels all simultaneously. We don't need to, it doesn't, I mean, you could also use ATR. You can use all sorts of stuff with this. But maybe you want your standard deviation, 1 standard deviation for your target. And then maybe you want 2 standard deviations for your target, rather. So you could go for, what, 260 something ticks, or so. We'll call it 250. And then you could come down here and say, I want my stop loss to be 1 standard deviation. So you have a positive risk reward. And now let me show you how I personally use these levels. Let's go ahead and add just one simple indicator right now, an EMA, the 20 EMA. A, B, C, D, E, F, E. Okay. So how about we do something like shorts below, longs above. Then you can also add stuff in like stochastics or RSI or CCI or any kind of oscillator in here as well. So let me just show you an example of how I would maybe take, say we weren't allowed to start trading till 10:30. This is actually how one of our templates is set up. So we can do, we're not allowed to start trading till 10:30. All this is off limits in a lot of our templates for the ORS automated strategy. So this is all off limits. We can start taking trades after 10:30 a.m. Eastern Standard Time. And we're going to go for a 1-to-1 risk reward of 2 standard deviations as our stop loss. I'm just going to color this red. So here's our stop and our target, 2 standard deviations as well. And we'll color this green. I'll move these blocks out of the way for a second. So I can see our first entry, we're going to use limit order pullbacks. So let me just zoom in. This is only using an EMA as a filter, not allowed to trade until after 10:30 a.m. So if we didn't, let's pretend we don't actually know what's going to happen here. All right, so we close here at 10:30. Here's the close of the candle, obviously. And what we're going to be doing is we're going to be looking for a pullback to the standard deviation line right above it. Let's see if we get it on the next bar. Did we hit it? Nope. Looks like we're slightly off. Well, now we have a candle closing below this standard deviation line. So let's follow it down. So here our order was here, but we didn't quite get filled. There's like I don't know, three, 4 ticks here. So once this candle closes, let's move our limit. Let's follow it down. Let's move our limit order down 1 standard deviation. And we're going to be looking for a pullback from the close of this candle right here to where our limit order is placed. And we do indeed get filled here. And where my targets go? We have a stop loss placed right here, 2 standard deviation lines above, and a target for a short, 2 standard deviation lines below. So we get filled here and we move along, goes down about 1 standard deviation, comes back against us, starts coming back down again, getting closer to target and target. This is actually a trade that our automated software did indeed take today. We had 3 winners in a row. And then once this trade completes, which would be here, then we can start looking for another trade if we're just using an EMA. So you could also do something like adding in a stochastic. Oops, there we go. And what if your one of your rules was you're only allowed to take a short if your stochastic is crossed down? So here, our stochastic was crossed down from right there to right there. We crossed up. So this would have been a legitimate trade. Our stochastic is crossed down. We're allowed to start trading after 10:30 a.m. and we are candle closing below the 20 EMA. So that's just one way that you could take this and trade it manually. Personally, I can't really deal with trading manually anymore. It's hard. It's really hard. How many people out there have had a hard time trading manually? I don't do it anymore. I haven't done it for a long time. I just got to take a sip of my beverage even just thinking about trading manually. So check this out. let's get rid of all this. Well, before we do that, let's get rid of our indicators. We don't need this. We don't need this. And we don't need this because I got something better. Get rid of that. Don't need this. Welcome to automation. And then obviously, I don't know. I can't stand it when people make videos and then they do exactly what I just did here, showing you what a short is. And then they continue the video and they tell you, and then here's how a long is. It's like, dude, I know that's how a long is. Just show me the short. That's fine. So whatever the short is here for this example, just reverse it if you want to go long. Okay. So let's go ahead and let's load up ORS Fusion 1.7. There we go. And I have the template here. And we can see our opening range is from 930 to 945. And we have our, this is the magic right here. We have our divider set to 4 standard deviations. We need a minimum range ticks of 100 ticks. And if it's over 800 ticks in the first 15 minutes, that day is crazy. I don't want anything to do with it. We got an 18 period EMA. We have our special T-speed W action, all this stuff right here. This is our ORS, signature ORS indicator for buy sell zones. So let's go ahead and apply the strategy in backtest mode, just so I can show you exactly how this strategy took these trades today that you also could have taken manually if you wanted to. So we can see, let's get rid of this. So we can see right here that ORS Fusion is giving us a 526 tick opening range. Let me make sure this is all correct. Yeah, there should be 3 wins. Okay, so here's how the strategy, excuse me, took the trades today. The first trade it took was right here in this sell zone. So same as I just explained for the manual version, we have a buy zone. So we need basically, okay, let me back up. We need 3 things to be able to take a short. We need to be in a red zone. We need to be below our EMA, and the EMA has to be blue. See our EMA here is special EMA, it changes colors. So we got to be blue EMA, closing below the EMA, and in a sell zone. So we can see here that we're in a green zone, and then we turn to a red zone here. So we're looking for a real quick pullback from the close of this candle, which is right here. And we have an automated limit order placed right there. And we can see, bam, it gets filled like almost to the tick. So we do have a 3 tick offset set on the strategy. We can see that's about 3 ticks right there. I got to zoom way in, but you guys get the point. It's supposed to be a 3 tick offset. 3 ticks. I don't waste time making that. So we pull back, our limit order gets filled, and then we're also looking for about a 2-to-1 risk reward on this trade as well. And there we have it. There is our target for a total amount of ticks of 254 ticks. Then we turn into a green zone, or you could look at this like it's an RSI or something, like up above 80, like you're not allowed to trade unless it goes below 20, or however you want to do the strategy. But now we turn back into a sell zone. So now we have our 3 criteria met. We are below the EMA, we have a blue EMA, and we are in a sell zone. So the strategy is going to be looking for a pullback to this standard deviation line if it can. Nope, see, it missed it. So now our order gets placed. It was here. And actually, it's going to stay right there because the candle is still closing within this standard deviation. Oh, see, now this is a perfect example. Now we close below the next standard deviation. And we're going to move our order, our limit order down. And now we're looking for a pullback to this standard deviation. This is a really good example. Now we close below the next one. It's like, uh-oh, we're chasing it down. But we're not chasing it down in an extreme way. It's very regulated. And now we're looking for a pullback to this standard deviation with a 3-tick offset. Oh, we never actually got filled here because then we turned into a buy zone. So we had actually, the strategy will actually cancel that limit order. And now we're moving along. Not allowed to trade, not allowed to trade, still no. Doesn't actually close above there. No, it does not. Now we turn into a sell zone. And we're going to be looking for a real quick pullback to that standard deviation line. Doesn't hit it. Got to move it down. Now we're looking for a pullback to this standard deviation line. There it is. There's our entry. And our stop's going to be up here. 2 standard deviations away. And our target is going to be about 2 standard deviations. Plugging along. Oh, it's coming back against us. Now it's in profit. But just because it turned green here, we're not going to cancel that trade. We're going to keep going. And target. So there was the second win of the day. And then we get a third win. And then we're not allowed to trade after 1340. So that's our whole window of the day. Super clean, really easy strategy to understand, really. But one of the coolest things is being able to mitigate your risk. Like how much do you want to risk on any particular day? This is without going too much into our backtest data, this is all hypothetical, and NinjaTrader did tell me to, steer a little bit away from, saying what the backtest data. I can tell you right now that it's really good. And we have lots of people that are really happy and we're being successful. But here, let me show you. So our target today was 2 standard deviations. We'll just call it 2. So 266 ticks. So we'll get a calculator out. All right, there's our calculator. So this is actually a really big opening range today. After a while, you'll start to see what the average is. The average, like probably about 250. That would be like 150. That would be on the smaller side. Maybe the average is like 250, 260. Anything over 300, we're all like, ooh, that's a big day, big day. So this is a big day for sure, over 500. So if we take 266 ticks as our target or our risk, since we're just in this case saying it's a 1-to-1, 266 ticks as our risk times 50 cents a contract for the MNQ equals $133. So for one micro contract, we know that every single trade that we take today is going to be $130. Pretty freaking cool. And say you wanted to use 2 micros. So you wanted to keep your risk under $300. Well, there you have it. You can literally do this every single day. You can have the same amount of risk every single day. I think it's way better than ATR. So like this day, this has ended up being a break-even day. It's an FOMC day. So I don't know. I'm on the fence of wanting to trade these things anyway. But we do stop trading before the FOMC actually happens. Now, I only got 3 minutes left in my presentation. I actually like, you know what? I actually like the fact that I'm not showing you guys the back test. You can simply go to our website or my YouTube channel or DM me, and I can send you all sorts of back testing stuff. Like this is educational. This is what I told myself. Have fun, teach people the basics. And if you want to see the back test stuff, just reach out to me. Okay, so here, our standard deviation, get that on there. Our range on this day was about 412 ticks. So if our target is 2 standard deviations, we'll say it's 198. Calculator, come back. There she is. So 198 ticks times 50 cents a contract. So on this day, we can have one contract, $99 risk, $99 profits. Or if we wanted to use 2, then it'd be under $200. If we wanted to use 3, et cetera, et cetera, et cetera. 5, you got a bigger account and you want to risk 500, or maybe you want to up this to NQ, whatever you want. I will show, I guess I should show at least one little bit of the back test. So, that's one thing I definitely want to, and we're going to take questions and answers here. So I've designed a lot of strategies, and many of them have used market orders. Market orders, in my opinion, in backtest, completely useless. It's the accuracy from live to backtest is horrendous. However, what I've personally seen with these limit orders to get in, limit orders to get out, the backtest, from what I've experienced, backtest to live, it's like 99%. So when we look at our backtest, something like this for 90 days, we can see that I just have so much more faith in the backtesting after seeing months of this live and matching. So if you wanted to do the risk smoothing on something like this, all you got to do is, it's actually quite simple. We can do it real quick in like less than a minute. We'll take, I call it risk smoothing, when if you want to only risk $200 a day. So you don't even have to look at this for the drawdown. So say it's 172. So 172, 172 wins minus 112 losses, minus 112 losses. So that's 60 wins times $200 per win. Of course, this is including commission. It's not always going to be $200, but this is just for presentation purposes. That's $12,000. Hypothetical, of course, in 3 months. Divided by 3. That's a hypothetical $4,000 risking $200 a trade. If we come back down here and we look at max consecutive losers, we can kind of look at that as if that's our drawdown. So what's that? $200 loss per trade times 4. $800 drawdown, 90 days. We also do have other instruments that we can trade. But when people first get started, definitely for the first month, I only recommend trading NASDAQ. Well, I don't know, if you want to trade gold, we do have NASDAQ, we got gold, we got crude, we got ES, but NASDAQ's my baby. All right, I'm only 1 minute over. How's that, Patrick? So I guess we can take
it's all good.
Pretty good? Nice.
Do
Okay.
you want me to assist with the questions here?
I don't know. Let me take a look at them first here.
Okay.
We get to the chat. Yeah, let's just go. Yeah, I'll go through them. It's all good. I got it, Patrick. Thank you. All right, let me go through here. We got 15 minutes, so let me scroll all the way up here. Thanks everybody for coming out, by the way. We got a small community on Discord. We all help each other out. It's really nice to be part of a team. And I'll share my contact stuff here at the end. You're welcome. Okay, why the 3? Adam says, why the 3 minute? It's just the best. It's the best as far as strategy performance goes. It's that nothing compares, really. I know there's something about the 3 minute. It's not the 1 minute where it's all wacky, and it's not the 5 minute where it's kind of too slow. There's something about the 3 minute chart on NASDAQ that seems to work best with the opening range and these standard deviations or these range levels. And, you know, I've been studying this for years, literally years. What is the tool that you're using to draw the standard deviations lines? That is my own Fibonacci tool that I made. And feel free to email me or Discord me when we're getting closer to the end here. I'll share that information, and I can send you the file, the template file for that. Where are the entries? I think I went over that. Does that make sense? I think you asked a little while ago. The entries are, yeah, if we're looking for pullbacks here. So this would be a good entry here. I mean, an entry. So we're looking for this pullback from the close of this candle to here. So this is the entry here with 6 micros. Okay. And is the strategy compatible with strategy analyzer? Yes, absolutely. Thank you. Amen. StratGeeks.com is the website. There's a question on that. What is the filter vertical background colors? Yeah, so that is our proprietary buy sell zone indicator. We call it the ORS buy sell zone. Very creative. How can I join Discord? We're gonna get onto that in a second. Nice, good. Yeah, wow. Okay. Let's go. That's it for questions. Yeah, it means I feel like I did my job then. All right, so let's get to the translate here. See if I even need any more of these slides. Yeah, so this is kind of, I mean, I'm not gonna lie, at some points during my trading, this is close to what my charts look like. I just found this online, but and now we got that. It's just a thing of beauty. It's Zen. I feel like the strategy is it's Occam's razor. Like it's simple enough, but just complex enough where it's, I don't know. I think it personally, I think it's an elegant strategy. It's my baby. I've been working on this thing for a long, long time. But like, I mean, look at this particular screenshot. Look at the respect to these levels, man. Look at the respect to those levels. Look at this. Bam, bam. And then this one that just blasts all the way through, takes out all those orders down there. And yeah, we see these patterns in nature. I mean, even in like the weather isobars, like the isobars. And yeah, I like to think of the range levels as a staircase that people are using on that particular day. And they're going back and forth, up and down, up and down. I mean, no webinar that I've ever done would ever be complete unless I went through trading in the zone a little bit. There's a random, so this is my edge. This is what I trade every single day. This is what our subscribers trade every single day. I mean, I've literally had, let's see. I don't need to share that actually, but I did want to, we got some really cool comments the other day. Sharon said yesterday, I've tried and purchased many algos and bots over the years. In my opinion, this is the best that I have ever encountered. And that was like unsolicited. I didn't even ask her to say that. She just like said it because somebody was asking questions on our Discord. It's pretty cool. I love having a community. And then Jamie said yesterday, also unsolicited, good for you. ORS is worth every penny, blah, blah, blah. But yeah, there's a random distribution between wins and losses for any given set of variables that defines an edge. This is a quantifiable edge, what I've always wanted. This truth makes trading a probability or a numbers game. When you really believe that trading is simply a probability game, concepts like right and wrong or win and lose no longer have the same significance. As a result, your expectations, here it is, expectations being in line with the possibilities, in harmony with the possibilities. I personally don't think any trading system is complete unless we can adhere to the 5 fundamental truths and the 7 principles of consistency. 5 fundamental truths by Mark Douglas. Number 1, anything can happen. Number 2, you don't need to know what is going to happen next in order to make money. You can literally just close your eyes and start pounding the keyboard. You might make money. Put a monkey there. Also, number 3, there's a random distribution between wins and losses for any given set of variables that define an edge. Number 4, an edge is nothing more than an indication of a higher probability of one thing happening over another. I trust our backtest with the limit orders. That's our edge. And number 5, maybe most importantly, every moment in the market is unique. I do have to go over the 7 principles of consistency as well. And these are really important. If I don't have 1 through 7, I don't have a trading strategy. Number 1, I objectively identify my edge. Yep, ORS Fusion, that does it for me. Number 2, I predefine the risk of every trade. Absolutely, 100%. Number 3, I completely accept the risk or I'm willing to let go of the trade. Sometimes I'm not, I don't accept the risk and I let go of the trade. Number 4, I act on my edge without reservation or hesitation. Absolutely. ORS just does it for me. I mean, I could tell it not to, but it's going to go. It's going to do it. Automation, there's no reservation or hesitation. It just goes. Number 5, I pay myself as the market makes money available to me. I'm not going to keep extending my target. Actually, we're having an update that's going to come out here probably next week. Where we're going to be able to have multiple targets, not just one target. Number 6, I continually monitor my susceptibility for making errors. Hot damn, having an automated strategy really takes number 6 away. I mean, not completely, you can always make errors, but it really, 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 really helps. Number 7, I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. So for our team here on Discord and our subscribers, I think of it kind of like this. Like we help each other. I mean, what my favorite thing that happens on Discord is if somebody new asks a question, that somebody who's more of a veteran with us answers their question for me, and I don't even have to answer the question. It feels like this. It feels like the race car. We got a bunch of us. So Eamon and I, my business partner, and then all of our veteran subscribers. And we got you in the race car. So yeah, we give you the software, the setup, the templates, training, discount, and an automated trading feature based on the tried and true opening range. It's tried and true. So we get different templates for different instruments. And we'll literally, I share the best stuff. I don't like hoard my favorite templates just for me and then give out crumbs to everybody else. No, like people know that it's me. I'm trading this exact same stuff. And everybody who subscribes gets a one-on-one training with me on Zoom, however long it takes. We also have really extensive videos on our YouTube channel. Please check out our YouTube channel. I guess we're getting to the point, Patrick, right? Where we can do the this final slide here. So if you guys go to our website, that's StratGeeks.com. We literally have one product. We're a mom and pop shop. We don't have hundreds and hundreds or whatever of subscribers. In fact, I don't want that many. I like having a team. I don't know. I mean, it's just something about sharing. It's kind of why I teach martial arts. I don't need to teach martial arts, but I love it. I love teaching. I love watching a kid improve from white belt to orange belt to green, purple, and the way that their psychology improves and their coordination. I don't know. I love being part of that structure. And StratGeeks and ORS Fusion enables me to be part of that structure for my work. Like I actually love it. I love you guys. So if you go to our website, then you can find this button here. It's pretty prominent. It's right on the front page, and you can click to join our Discord group. In fact, I can show you that right here. So here's our website, StratGeeks, and then just scroll down a little bit, and then you can just click this button and join our Discord group. And please subscribe to our YouTube channel, StratGeeks. Just go to YouTube, plug in StratGeeks. It'll come right up. So at first we are going to do on the on the email or the sign up page rather, it said 20% off, and I felt like 50% off for you guys just because I'm so happy to do this NinjaTrader webinar. Thanks again, Patrick. 50% off for the first month. My email, onetraderjake@gmail.com. I was going to do an after party Zoom meeting. I might have a little bit of time. Let me check the time. I actually don't think I do, but we can set something up. So let's not even worry about that for right now. So stratgeeks.com, join our Discord group, ask me questions, DM me. This is me here, Jake at ORS, Jake Hillman. Make sure it's JAKEHILLMAN is kind of my handle. Make sure that's the right Jake. And when you purchase your first month, make sure you use code webinar50 for 50% off your first month. That 3 minutes early. What do you think about that, Patrick?
It was great. There was a question. I don't know if you answered it earlier, but Ahmed was asking about if you know anything about the Apex prop firm and the
Oh
strategy.
yeah, here, let me finish up the questions. Thank you. Got that. Got that. Yes, we can. You can use the Apex. Yes, we have lots of subscribers. I would say most are using Apex. Introductory sale, absolutely. 50% off the first month. We don't sell the strategy outright yet, but DM me and we might be able to figure something out. I'm open. I'm flexible. The discount is for the first month. Yes, and yes, we can use the strategies in Apex. We have a whole protocol for using the strategy in Apex accounts, which really doesn't really, I mean, the strategy is also quote unquote legal. It is legal to use in Apex or prop firms. So I've specifically designed it for that reason, or for one of the reasons. The fib tool is on Discord. If you join the Discord, it might be in our VIP area, but I think I can make that accessible to everybody. But just DM me and I'll send it to you that way. It'd be a lot easier to get it to you that way. Any other questions? That's pretty cool. I was expecting more questions. That means I kind of got everything explained pretty well. Well, yeah, I hope to see you folks over on our Discord channel. Say hi. And then we can also do like another webinar just on our Discord channel at some point, maybe later next week when we update the strategy with the multi-target as well. All right, I think I'm good to go, Patrick.
All right. Well, thank you very much, Jake, for that. Appreciate it.
Absolutely.
If you did enjoy today's session, we hope you'll join us for future webinars. You can follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. And we'd like to remind all of you the information provided here today is that of StratGeeks and not of NinjaTrader. All information was for educational purposes and should be not construed as trading advice. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us here at the NinjaTrader ecosystem.